I can flat out guarantee that in every financial decision you make, the IRS is involved, either today or tomorrow, but they are involved. And that's really what we're going to discuss today. Now, I'm going to start with a story, and I'm going to call them Larry and Jan. Larry and Jan came into the office in 2002. And so I sit down with Larry and Jan, and they're all excited, and I'm excited, able to sit down and take care of them. And I want you to keep in mind as I share this story, their good friend that goes to church with them, Steve, their CPA, who they pay for advice, is sitting down with me to talk about their financial world. So the first question I ask is one that you need to ask. Larry and Jan, how much income do you need to maintain your standard of living? Now, that's one of the first things you need to write down. As a certified financial planner, as an academic, I was a professor at Purdue for 7 years teaching financial planning to seniors. And as somebody in this industry for 35 years, I talk out of 3 different areas, and they don't always agree. One of the things in the world of academics, they will tell you when you go to retire, you need a certain percentage of your income. Well, when I'm talking about large numbers of people and the working class or the median class or any academic term you want to put with it, when I do that, maybe. But when I'm talking about you, when you're looking at your life, your unique situation, what I care about is you maintaining 100% of your standard of living, not a percentage of your income. So Larry and Jan, what do you need to maintain your standard of living? And they said, Joe, we need $8,500 a month. I said, great. This is 2002, keep in mind. And my next question is, do you need that gross or net? And, Larry kind of raised his head. What do you mean? It's like he was a business owner. He understands this. Gross means you get $8,500, then you got to pay the IRS. Net means you've already paid the IRS and you get $8,500. We go, we need it net. We need $8,500 in our checkbook to maintain our standard of living. I said, great. Larry and Jan, how much have you accumulated up to this point? And this is an interesting thing about your retirement journey. During accumulation and preservation, it's about assets. When you go to land that plane in distribution, it is really about income. It's a material shift in attitude and in actions that you have to take in a portfolio. And he says, Joe, we've accumulated $1.8 million. I said, that is great. Think about this. Central Indiana, 2002, they put a fistful of kids through Purdue University, and they still had $1.8 million. That is a great job. I was very, very proud of them. And I said, but tell me about the $1.8 million. So next thing to put in your notes, not all dollars are equal, and not all beneficiaries are equal. Not all dollars are equal. So in this case, he had $800,000 that was in an IRA. That was money that my partner, Steve, had helped him put away over the years as he was working and building his business. And he had $1 million from the sale of his business, his baby that he just sold. Now, I don't know if you've ever sold a business. I don't know if you've ever owned a business, but I can tell you, being the co-founder of the Financial Enhancement Group, selling, it's like a child, right? You get, it's like your baby. And so I understood the emotional part of that. But he had $1.8 million. But it was 2 different types of dollars. So I took all of that information, I took his unique situation, and I sat down and I created a plan, not just any plan, but a great plan, if I may say so myself. So they had money from the sale of their business, they had money from the IRA account, and the plan involved them taking out money out of both types of dollars in order to minimize the amount of taxes that they paid over a long-term period of time. I want you to think about this, right? So they've come to see me. I'm a certified financial planner. They've agreed to pay me. I just got done telling you that they've worked with me for the last 21 years. He just passed away last year. His CPA is there saying, this is what you need to do. But what do you think they said? Now, most people, when I share this with them, say, well, of course they said yes. No, they didn't. And I just ask yourself, what would you say in this situation? See, it is easy to academically say we need to pay the least amount of taxes overall. Everybody gets that. But to actually write a check today feels painful. It doesn't feel right. And Larry looked at me and he goes, "No way, Joe, I hate taxes." So for about 10 years, he showed up every Saturday morning at the coffee shop. All he used was the money that was inside from the sale of his business. He paid very little, if any, taxes to the IRS over a course of 10 years. He would go to the coffee shop, brag to other families that I take care of about finally not paying the IRS. Man, I know it felt good. I get it. But the problem is, over that period of time, his bank account emptied. The $1 million was gone, and now everything was behind the proverbial vault. Remember your stowaway. It was all now behind that tax-deferred item. They still had $1.8 million. By definition, we did the job at the Financial Enhancement Group. The problem is he still wrecked his retirement. He had $1.8 million, but it was now all inside of the IRA. And some of you may be going, well, what's the problem with that? Well, clearly, eventually, every dollar is going to be taxed. Whether you need it or whether your beneficiaries get it, the IRS will get their part of it. Your only way out of that is to die and then leave it to charity. Remember, they needed $8,500 a month. It's now 2012, 2013. He walks into the office. He says, "Joe, I need my $8,500. And I looked at him and I said, "Larry, no, you don't. You needed $8,500, but now you need $13,000 because now we have to pay the IRS." It was all tax deferred. As a result of that decision, Larry and Jan had to reduce their standard of living. But it wasn't over bad investment returns. They still had $1.8 million. It wasn't over inflation and running out of money. It was because of bad tax decisions. Not understanding taxation changed their lives. It changed it for the worse, and most importantly, it changed it forever. Once you pay the IRS, they're not sending the checks back. There is no do-over. I like to read, and one of my things I like to read about are business books. An author named James Clear wrote a book called Atomic Habits. It's a great book. And in that book, he wrote a quotation: "Success is never due to one thing, but failure can be." So in our mind, success is never dependent upon just getting one aspect of the financial world right. It could be retirement, it could be tax, it could be investment, it could be legacy. They've all got to work together. Doing one of them right will not get you to the promised land, but doing one of them wrong can destroy you. And one of those big ones that I see ignored day after day is understanding the U.S. tax code. Our purpose here tonight is to apply to be your guide, your fiduciary through your financial journey, to help you understand that you truly are on a journey. Now, for complete clarity, for you, what I want you to take away from this time is to unwind some of the complexity, confusion, and mystery of how to maintain your income and thus your standard of living during all of your retirement years. For FEG, we want to identify families who don't want to worry about their money. That's it. So you understand my end, you understand where I'm trying to take you, what I'm trying to accomplish for the firm side. Now let's spend some time and talk about how to really get a good handle and good understanding on where you are. I've been in the financial services industry for more than 35 years now, helping families just like you. For 25 years, FEG has been around, taking care of the families we serve. We are truly a team. And you need to understand that. In the securities industry, when you hear a team, it is typically an old guy selling his business. They like to call it a book. I am offended by that term. Selling their book of business to younger advisors. Now they're a team. And at the Financial Enhancement Group, everybody you see on that screen is actually paid by a W-2. There's not commissions. They work together collectively as a team. And so instead of having advisors who are pitted against each other to figure out what relationship they get, you truly have the interworking of 35 people working together to provide the best solutions.